Well, good evening, folks. Welcome back to the channel. So today we're pivoting from cryptocurrency back to dividends, and not only dividends, but one of my favorite dividend ETFs and one of my favorite monthly videos, the QYLD monthly dividend update. So just as some notes here before I get into it. So the crypto video I posted, I'm really proud of, the best video by far ever uploaded to this channel. A lot of work went into it, a lot of preparation. And I think for now, I might start doing videos like that once a month and then just keep my regular videos going in addition to that. But I really like that, and I'm really happy with the performance of it. It's a 1 out of 10 so far, and it's holding steady. And I've picked up a lot of subscribers from it too. But we're pivoting back to dividends today. It would be nice too, since I talk about pretty much everything finance related, if I could unite the different audiences between cryptocurrency, dividends, options, credit cards, stock investing, all of those things. Like if there was a good way to unite all of those, we could really build something cool here. But we'll see. You know, I tried. I did a little spoof of an Amex situation, and I used an option premium as a kind of a joke, but a solution to that situation in a 4th of July short that I did. So I'll explore different ways to try to get different audiences to enjoy the same content. But with all that being said, today I want to get into the QYLD monthly dividend payout. And I'm really happy with it this month because it's actually gone up for the first time since I've been invested in it. This is the first month where month over month, I think it actually increased in value, which I'm going to show you. And the dividend itself is higher than it was the month before. And so I have it up here. I have all 12 months of it conveniently sorted out. I hold 210 shares in my Roth IRA, and it's paying 38 bucks a month, which is pretty solid for based on what I have in this and the fact that it trades at about $18 a share. It's still holding at about a 12% payout, which has actually increased slightly again because the price of the fund has increased. So that covered call premium has increased. The other one I got into was Qqqx, which that one pays a quarterly payout, and that's back up to almost 50 a month, or not a month, but a quarter. So it's paid 4 times per quarter. And I'm going to talk about QYLD. I'm going to go over, just kind of as an outline for this video, I'm going to go over the performance of QYLD, the future outlook, go over Qqqx, and then as bonus content, I have some other funds I want to cover with all of you all that I've gotten comments about, and I've gotten basically, fan requests for and whatnot. So let's get into the performance of QYLD over the last month. And I'm really happy with this one because I was kind of on the fence about whether or not I wanted to stay in this one long term. I mean, I absolutely love the payout in it, but I wasn't so sure about the long-term performance of the fund because the fund has been dropping month over month for quite a while, and since I've been into it. So if we go back a year, it was 22.49 and it's at 18.03 today. So overall, not that much of a fluctuation. It's about $4.50 fluctuation. But if we go year to date, so if we start at the beginning of the year, we were at about 22. So it stayed flat from July to like January. It basically stayed flat and then dropped, started increasing again in March. And this is around the time I got in. Then started dropping significantly. But what you'll see over the past month, we had an increase in the price. So 1761 to 1803 today. It's fallen off a bit. July 22nd, it hit 1823. So nice little bit of an increase there. And because of the increase, like I just showed you, the dividend or the covered call premium has increased as well. And now let's look at Qqqx. And then I'll surprise you all with the other funds I'm going to cover. And these have even juicier payouts. I didn't even know this. I've seen these funds discussed on different forums and things like that. And I don't know why this Fidelity ad keeps popping up here, this colorful thing. Let me block it. So Qqqx pays an 8.2% dividend payout, or $1.97 per payout. And oh, good, it's gone. So it's at 23.47. Projected tomorrow to open at 23.50. Let's review month over month performance. This one actually went up as well, 22.70 that it was at June 27th. Around July 1st, it was at 22.08. So it's gone up almost $1.50. It was at 24.33 July 21st. It's come down from then, but remember this one pays its payout quarterly. And so now what I want to look at, there's one called JEPG, I believe, or I must have that wrong. Let me see. I could just pull it up, but I kind of want to. JEPQ, here it is. Because I have a spreadsheet I'm going to get into at the end, because what's one of these videos from the coach here without a bit of spreadsheet analysis, right? So this is the Jpmorgan Nasdaq Equity Income Premium ETF. This is a 15.75% payout, which I've never seen something this high for one of these related funds like this. And I'm actually going to have to do a little bit of additional cross-checking on this, because I'm very tempted to get into this one next just for the payout. So what I want to look at here, historical data, just want to do some cross-checking, because it's anybody on here can tell you, oh, just go to etfdb.com, the ETF database, sort for dividends, and then you'll find one that's paying like 20% or something insane because the fund is tanking. But you got to remember the why. Remember that. So, or you have to know the why. So let's sort for dividends only. And let's look at year to date. And let's see here. And then the next one, it already knows one of the next ones I'm going to talk about is a Nuveen fund. I think I'll get into that if I have time. But let's see. So this dividend, that should show. This is why I wanted to cross-check this. Let's see. Oh, wait a second. Monthly. It's important to cross-check these things. So let's see what this comes up with here. Is this moving? Because this is a little concerning just seeing July 1st, but it's telling me on paper that it's paying 15.75%, which, given that, I'm very tempted to get into it. Let me see if I go back 5 years. Let me see if this is going to do anything. For some reason, this is not cooperating with me. We've got a 0.376 and a 0.34. Let's try to annualize that real quick on my calculator here. And it's not gonna recognize me with my awesome glasses. So I gotta, to do Face ID, I gotta do that. Okay, let's see real quick. So 0.376 plus 0.34, I guess it pays twice. If we were to annualize that, that would be 859 divided by 4732. So that's approximately where it's getting the 15% estimate. So this must be monthly, but for some reason, Yahoo is being a Yahoo and not cooperating with me. So, oh, look at this. All the futures are up tomorrow. I guess the market's expecting, because we've got our big interest rate announcement tomorrow by the Fed. And we don't know yet what Papa Powell is going to decide. But typically when he talks, the market reacts very well. He knows how to speak in a way that kind of strokes the market in a positive way. So it looks like everything's up tomorrow. So that's a good sign. So let's go back to the home page, and I'm going to show another one that pays like a 14% dividend, which is also kind of unheard of. So this one, let's see here. GOF, this is a Guggenheim Strategic Opportunities Fund. And these are kind of all kind of in the same, along the same lines, same kind of fund families. So the ticker symbol is GOF. It's golf without the L, just to remember it easier. So let's go here and look, and I'm going to do some of this in the spreadsheet too in just a bit. So this is paying $2.19 per share on $15.99. Now this one I think is actually more tempting than the last one, because the last one's $47. This one's a lot more affordable. With the same amount of money, I can pretty much get three, or not just me, but any of you can pretty much get 3 times the shares. So, and this is paying a 13.6% payout, which is awesome. Let's look at the performance of the fund over time. Doesn't move that much. Well, $6. Yeah, it's dropped like $6, but what hasn't in this market? Let's look year to date. I mean, compared to other funds, like this isn't a huge movement in its defense. 1953, February. Okay, so it's moved like $3 or $4. Now let's look at NUSI. seen this pop up a lot. This is another Nasdaq 100 risk managed income ETF. This is paying a 7.5% dividend. So let's just focus on those other two, because this one, we're already getting that with QYLD and with Qqqx. So now what I want to do, I want to go to the spreadsheet here that I pulled up that I actually prepped before the video. And what I want to go over, so this is the monthly payout for QYLD. This is on an annualized basis, times 12. I have 210 shares in the IRA. I'm ignoring the brokerage for now. I get another $12 in dividends from the brokerage because I have it in both. But so this is 210 shares, $2.17 per share. So just cross-checking to make sure that the payout is accurate, 12.04% payout. And then Qqqx, $49.34 per quarter times 4. That's $197.36 annualized, 100 shares, easy math, no surprise, $1.97. So that's an 8.41% payout. And then the other two top ones that I talked about is JEPQ, $47.32 current share price. So if you were to buy 100 shares, that would cost you $4,732. Annualized at a 15.75% payout, $745, or monthly, $62. So there's some nice passive income. And then GOF, or I keep wanting to say GOF, but don't scoff at it because it's got a great payout, $15.99. For 100 shares of this, $15.99, $217.30 dividend payout, or $18 a month. But on something like this, because it's cheap enough, I would go bigger on this. Like they say, go big or go home. Well, I am home, so I can't go home. But if I were to say like 250, or just say if you were going to take like your whole Roth IRA contribution for the year, just say you were going to do like, let me see what 500 shares would be. Not that. This times 500. So that's, yeah, that's a little much. Let's just say 6,000. I think they increased it, but let's just say 6,000. So this would be just 375 shares, not a dollar sign. Excel, come on. So 375, and then times a 0.1575. This is like if you reinvested. Hold on, what is this doing? Oh, I need to, so let me see here. I need to do 375 times 15.99, and then take this, and then this times 0.15, what was it? This wasn't the 1575, this was the 1359. So this times 0.1359, $814 divided by 12. So that would pay you $67 per month. So what I want to emphasize here with this, and I'm going to end on this note, is that you can actually achieve a better result for about the same. Well, no, because you're putting 6,000 in this. Let me see if you just put 5,000. Let's do this. 5,000 divided by this, 312. This times, we'll just say 313. Okay, so the takeaway here, $62 monthly payout in the JEPQ. For a lesser share price, you can buy more shares, so you almost come out the same with more shares, $56.68. So you're only like not even $6 off. Is that right? Less than $6 off. I like to overstate things sometimes. But where this would really show up if you do the dividend reinvesting on this, let's, you know what, let's add some bonus content. Let's look at that. So if we were to take, and this annoys me here because this is supposed to be 313. So let's do this. So if we were to take 313, let's do a little competition here. JPQ and then GOF, GOF. So let's take 313, we'll just say 315, make it even. And then here we had just 100 shares. Okay, so at a 15.75%, we're going to do 1.1575. And this is with reinvesting the dividends. And then this was 1.1359. How's that from memory? Huh? Pretty good, huh? So let's just see if this is going to carry forward now. Let's format. And then let's see. Okay, looks good. So let's see where we are at the end of 10 years. And this is always fun. So in 5 years, we're here. So 6, 7, 8, 9, 10. We end up here. 6, 7, 8, 9, 10. And then just say at the end of this, just say that the share price for JEPQ, say it's held like, say it's like $50. So this is how much money you would have. And then in this one, say the share price has gone up to $20. So you come out ahead here. So that's pretty good. See, because of the compounding effect, because you're buying a cheaper one and you're investing more share, you're reinvesting more shares, you come out ahead by over $1,000 with the dividend reinvestment. So that's pretty good. So if you enjoyed all that, please remember to like, comment, and subscribe, and keep an eye out for future videos. I'm obviously going to do a lot more dividend videos because that's really kind of the basis for this channel. That's like, I think my core audience is a dividend audience. So hopefully some of you guys that I might have lost with the crypto videos, hopefully I can get you back with this. That's what I'm trying to do. And not just that, not just get you back, but I need you to, share this with everyone, friends, relatives, neighbors. So if you enjoyed that, please remember to like, comment, and subscribe. Thanks so much for tuning in. Take care. Have a great evening.